Hello, in this presentation we're going to talk about forms within QuickBooks Pro 2018. If you've been following along with us, we will be continuing with the Get Great Guitars problem. If you have the backup, you can restore that at the File and Restore here. There's a presentation showing how to do that in a prior presentation. We have the View tab open or the Open Windows tab open, which can be found at the View drop-down and Open Windows tab. Only open window at this time is the Home tab, which can be found at the Company drop-down and the Home page. We are going to be talking this time about forms. Forms are going to be crucial types of information within QuickBooks. And again, they kind of have their own term. When we think of QuickBooks and we think of forms, we're really thinking about a lot of these driving documents within the home page. The bills, the invoices, the receive payment, the create sales receipts. All these things are going to be types of forms, and typically we can think of them as printed forms. However, they're also really important to see within the QuickBooks system, because whenever we look at the data, it's typically going to be driven by forms, meaning when we enter the data, unlike what we do when we think about like theory in terms of accounting classes, which we do with debits and credits, forms are the driving documents that really enter the data, that the data is driven by the inputting of the forms. And then QuickBooks uses that information to create the journal entries that we kind of learn within the financial accounting. That's why these forms need to be set up with the lists items here, and that's why that's one of the more complicated items to set that up. It's also why once set up, the forms are easier to use. It's easier for us to enter the forms and then just let QuickBooks do the calculations in order to generate the financial statements based on those forms. In order to look at that, we're going to open up the balance sheet and the income statement and jump back and forth from them to these forms a bit to get an idea of what we mean here. Going to select the drop down up top for the reports, scroll on down to company and financial, and I typically start by going to the balance sheet. So I'm going to scroll down all the way down to the balance sheets, the second half of that drop down, and select OK. And then instead of changing this date, I'm going to check the date, the customized report up there where we will have a date range, selecting this item. And that'll help us to drill down on any particular item we want to drill down on and see the detail from a date range perspective. That date range being 01/01/21 that's January 1st, 2021, the year we will be working in, and 12/31/21, December 31st, 2021. So January 1st, 2021 to December 31st, 2021, and we will then select OK. So there is our balance sheet. I'm going to open up the profit and loss as well. So we're going to go to the reports up top, come down to the company and financial, and we're selecting the profit and loss standard, the first one. Same dates. I'm going to tab over here and select 01/01/21, January 1st, 2021 to 12/31/21, December 31st, 2021. So there is our profit and loss. Now, if we go back to the home page then, we can see that some of these items will be used to drive that profit and loss. And these are going to be the forms. So when we see the forms from this side, for example, if we were to see a bill and we click on here, we're going to see a bill. Looks a lot like a check. If we look at a prior bill, then here's one for Edison. We generated the bill. 648 is the amount, and the other side going to the utilities here. And note there's no debits and credits here. We're not making a journal entry. We're not telling any account to go up or down specifically. What we're doing is just filling out, in essence, this form. And this form then is what will be used in order to generate the financial statements. If I close this was a form 648, and we go to the profit and loss, and scroll down to the expense section and look for this utilities item here. That's where it was at. Here's the utilities amount. I'm going to use the quick zoom feature of QuickBooks and just double click on this. Great feature. We're going to double click and we're going to go from the end result back to what was used to generate it. In this case, there's the bill right there on 228. There's our bill. And you can see the account type, that's what's being used to drive it. That's what's being used to create these financial statements. Double clicking on this 648 will give us the bill. This is why every time, if we really want to understand the system, whenever we create a form, invoice, bill, check, we want to think about what is this going to do? What's this going to do to the financial statements? Because these are the things that are making the financial statements. So this is the bill. We're going to close this back out. We're going to close that back out. If we go back to the Home tab, then you can think of a lot of these types of items as in a similar way. So when we have the pay bills, that's going to be checks. Basically, when we do the pay bills, we're writing checks. So we'll look at that when we look at the checks feature down here. Well, let's look at it now. We have the write checks feature here. And here's an actual check. And of course, if we go back to a prior check and just take a look at one, back to the prior check, this one to the Internal Revenue Service. And it was for $614, and it was for Social Security. So that's going to be the item. And of course, the checks are what will be used to make the financial statement. What is going to happen? Cash should have gone down by this, and the other side of it will be going to the Social Security payroll item in this case. So let's close this out. And if we go back to the balance sheet and we go to the checking account, double clicking on the checking account, and we scroll down, we see some of these items. I think this was the payroll check we were looking at here. And we'll see that it says paycheck here. Other types of checks will just be called a check. So they do specialize the different types of checks. But either one of them, like this check here, of course, if I double click on that check here, it will also be a check form. And that's what's going to be used to drive it. So a lot of times when we decrease the checking account, it's going to be done not with just like a credit to the checking account as we would in financial accounting. We'll see the form. Even if we enter the data in a different format, meaning if we enter the data directly into the register, we're typically, like it was in this particular example, this wasn't actually entered into a check, it was entered into the register. QuickBooks will still use the check form to show that data. So we're going to close that back out, close this back out. Scroll back to the home page, see what else we have here. We then have the customer section. The other types of forms we have are the create invoice, typical form. We click on it. It's a deceivingly simple looking form. If we go back to an invoice, it looks like a very simple form, and it is, and that's the beauty of it. We can make an invoice very easily. I can have someone at the check register or something, or someone making invoices and mailing them out without having much idea of what is going on. However, there's a lot going on with an invoice, and the invoice is what's being used to drive how the forms are created. And we'll look at the invoices later. How to make them is a lot harder than how to enter the data. Teaching someone how to enter the data, not too difficult. Making the format to enter the data, more difficult. And analyzing what's happening to the financial statements and what the invoices are actually doing, a bit more difficult as well. So note what we have. We've got the item, we've got the inventory item, we've got the rate. A lot of things going to happen with this invoice. One is the accounts receivable is going to go up because it's an invoice. And that means people owe us money when we generate it. And we're going to have a sale that's going to go up by the amount of the sale. And we also had to remove the sales tax. So we're going to have a sales tax payable is going to go up from this invoice. And there's also a number that can't even be seen here in that we are selling inventory, a guitar, an Epiphone Les Paul in this case. And that has a cost of goods sold, reducing the inventory in a perpetual inventory system and recording the related cost of goods sold to it. Though that's all happening with an invoice here, and we'll get into how that happens later on when we create the invoice. But notice the actual data input, not too difficult to do. We don't need any journal entries in order to enter all that stuff. Once set up, we just need to enter the invoice. The invoice then generates all that information. If we close this back out and we go, for example, to the profit and loss and take a look at one of those many accounts affected by an invoice, such as the merchandise sales, zooming in, double clicking on, scrolling down, we can see the major items here are going to be the invoices that are going to be dealing with this. So here's an invoice. I'm not sure if this is the same one, but it looks like it could be. It's the Epiphone here. So we'll double click on that. And there's an invoice, right? So those are going to be the things that are really, when we drill down on the data, these forms are what we will see driving the data, driving the data input, driving what is really happening within the system. Closing these back out, going back to the Home tab, we also have the Receive Payment. This is going to be an item we're going to click when we get the payment. Isn't something that we typically print out, but it still acts like a form within QuickBooks, meaning if we go back, we can see this item of the Receive Payment item here. This is something that we're going to use when we get the payment, and you're not going to generally print out the Receive Payment, but it really acts like a form in that it's going to be used in order to create the journal entry of the receiving the payment and the reducing of the accounts receivable. So for example, if we close this back out and we go back to the balance sheet and we open up, say, let's just go into the undeposited funds and double click on that, we'll see these items that says payment on it. And that's going to be the Receive Payment form. If we double click on that, it'll be driving these forms. So that's going to be another thing. It's another form that we're just going to be using to drive QuickBooks. It's what's used in order to help us make these financial statements. These are the source documents, the source forms. Closing these back out, going back to the Home tab, hopefully. And then we have the Create Invoice, or Create Sales Receipt. We did the invoice before. If we click on this, it looks a lot like the invoice, so you'll forgive me for getting them mixed up. If we go back one here, we have the same type of layout, except it's a sales receipt, and that means we're going to get payment at the point of sale rather than it going to accounts receivable. All else is pretty much the same, meaning we have a sold inventory in this case, and that means that we're going to get cash, or in this case a check. We're going to credit sales for the $4,500. Oh, we didn't have inventory here. This is rental income. So this is rental income. It's a little bit easier to have the rental income because all we're going to have is the check, and then we're going to credit the revenue, and we don't have to deal with sales tax, and we don't have to deal with the inventory. But if we go back a few more, if we go back to another one, this one is something with inventory. We have the same situation that we did with the invoice with this sales receipt, in that now that we're selling inventory, we've got the sales tax, and this is also generating cost of goods sold and the reduction in inventory as well. So I'm going to close this back out. Then we got the record deposit. So whenever we record a deposit, it's going to look like this screen here. We'll see this screen every time. So I'm going to close this back out and go back to the balance sheet. And then again, wherever we put this deposit, going into the checking account, even if we go directly into the register, it's going to say deposit. And what that means when we click on it, it means that form, that input screen will show up. That's the screen no matter where we put it into the system, even if it were a journal entry, or if it were, well, possibly not a journal, it might be a journal entry and not, but if we put it into the register, it'll typically still generate this form to drive the transaction of a deposit into the checking. And I even think even with a journal entry, it will probably still do that. I'm not for sure on that, but we're going back to the home page. That's going to be the deposit here. Going down to the payroll. These are going to be the input items as well. So whenever we click on the payroll, this is basically going to generate a check at the end of the day. And we already saw what the check looks like. Once we process the payroll, we will end up with payroll checks, and that will be driving the checks then being the forms that will drive the payroll process. So remember, in summary, the concept of forms are going to be really important. Many of these items within the Home tab are what we basically think of as forms. When we look at them, that we see them as things that we can print out, but the keys to them isn't just that we can print them out. The keys to them are that these are the driving factors. These are the things that we have to put the data into. These are the things QuickBooks will use to generate the financial statements. These are the things that will tell us what exactly those generated financial statements are and how they were created through the naming of these particular forms when we drill down on the detail of those particular forms.